signal shines bright. WUCC 99.9, bringing hope to the night. Voices rising, uniting in grace. A church without walls, you can find your place. Your place. 24 hours, the truth comes alive. With every story shared, you can learn to thrive. Spreading words of faith into the air, guiding our spirits, showing we care. Listen daily, let the message ignite. It's WUCC, we walk in the light. Where you get your meat with your daily bread. Heartfelt words spoken, putting light on the way ahead. Together we rise, hearts beating as one. In the voice of truth, our battles are won. That echo, calming our fears. Each voice is a beacon, guiding from within. We gather and listen, let our journey begin. Stories of hope and the lessons we learn. A family united with passion we burn. Anointed programs lifting our souls high. Every prayer is a whisper that carries us high. In the hands of the faithful, we reach for the sky. Voices of hope, painting colors so bright. With every heart touched, we're changing the night. Making it home. Listen daily, let the spirit unfold. In the voice of truth, our journey is gold.
It's the Daily Steward Show with Bill Robinson. What does God's word say about stewardship? Being a good steward. Working out your salvation. Sharing the gospel. Casting out demons. Healing the sick. Fulfilling your role as husband or wife. Attending church. Work. Handling money. Gifts and talents. Managing our time. To say Wednesdays at 10 here on WUCC 99.9 FM.
Good morning. This is Bill Robinson. It's another great day in the state of South Carolina. We're here from the broadcasting live from the station in New Ellington, South Carolina. And with me today again is the great pastor Bill George from University Parkway Church of God.
Hello, everybody.
Yeah, he's such a great asset to the station and to this broadcast. We really appreciate him. So reach out to him on the chat. Tell him you love what he's doing here. We just love him. Conquering with Christ LLC is a Christian broadcasting company. You can find WUCC 99.9 FM on the web at www.cwchrist.com. That's www.cwchrist.com. On the website, you can locate numbers to call or emails and also ways to support the ministry of WUCC 99.9 FM. If you have questions for me, you can reach me at bill@thedailystewart.com. Love to pray for you, hear your opinions or your comments. Note that the opinions shared today are our own and do not necessarily represent the beliefs of this station. So what is a steward? We talk about that. And a steward is someone who manages something. And you just think about all the resources and things that God has blessed you with, and he really expects you to manage those and steward those things. It could be relationships, money, almost anything that you can think of. Being a good steward and walking out our Christian walk with that is really about managing what God's blessed us with. And last week, Pastor Bill, we had a really great guest on. Pam Morin talked about leadership through adversity, and that was a really great show. So
she's a wonderful lady.
Yeah, shout out to Pam for doing what she did. We might have her back on again, by the way, talk some more about leadership.
It's wonderful.
Today we're going to be talking about investing, and we're going to talk about basics of investment. But before we get started, I have to read this because I want to make sure everybody understands that we're not investment advisors. So the content of this show is for informational and educational purposes only and does not constitute personalized investment advice. No one associated with the show today is a licensed financial advisor. The listener should not rely on this show for making investment decisions and should consult a licensed financial advisor before making any investment decisions. Okay, so we got that out of the way so we can get started. Investing should fit your financial plan. So again, when we talked about budgets, if you're living paycheck to paycheck, you have to get out of that living paycheck to paycheck before you can start investing. And really, before you do any investing, you should have an emergency fund set up. Correct, Pastor Bill?
Yeah, I've heard that a lot. And I was thinking about, I seen what you were going to talk about. And I just recently watched a video on the what happened during the Great Depression. And they were making investments and stuff based on credit card things. Is that not correct?
Yeah, and we're almost to that. Well, we probably are to a certain extent seeing that today. I was on a podcast yesterday from the American Association of Individual Investors, and they were talking about the Federal Open Market Committee notes and what the Fed may do in terms of interest rates. And they were asking for questions. And so one of my questions to them was, are you seeing FOMO, fear of missing out? And because they're like in the 1929 stock market crash, people were fearing that they were missing out on wealth. And so you had the shoe shine boys and everybody in Wall Street that was even remotely connected or listening to the stock market going up was investing. And you're right, they were using credit, and so we're seeing that today. So we'll kind of watch that and see where that goes. I want to talk about Proverbs 13:22, and this is about investing for the future. And we've talked about this before, but it says, a good man leaveth an inheritance to his children's children. So, again, as you set your budget up, you want to make sure that you have the ability to do that and leave an inheritance for your heirs. And then also about diversification. The King James Version, again, Ecclesiastes 11:2 says, give a portion to 7 and also to 8. So a lot of individual advisors talk about that are Christians in terms of diversification. And, we'll talk about that briefly too when we talk about risk management. And then finally, we were talking about this a little bit, Pastor Bill, on the way over here. We probably ought to do a show, The Morning Drive, and just record what we're talking about.
Really.
But
Probably be a
again,
good show.
yeah, so this says, trust not in riches. So the King James Version, again, charge them that are rich in this world, that they not be high-minded, nor trust in uncertain riches, but in the living God, who giveth us richly all things to enjoy. And I think, that can be, just like we were talking about the eye of the needle, that can be a burden or an idol if we get into an investments and we start looking as our investments as our security and our peace.
Yeah, you can lose money in the stock market as much as you can gain it. So
Yes,
probably
correct.
not a great thing to depend on is, like you said, their future.
Yeah. So an investment, what is it? When we talk about investment, it's defined as a resource, usually money, that is allocated to generating either future income or gain, which is an increase or profit. So depending on what your investment objective is, you might be going after growth, you might be going after income. It just depends. And there are many types of investments. So the first concept you need to grasp is liquidity. And liquidity is the ability to easily convert the investment into money. So at the top of the pyramid on liquidity is cash. Cash is the most liquid asset. This is your bank account, your savings account. That is a very liquid asset. It means you can draw on it immediately. So if I wanted to get to some liquid asset immediately today and I needed to give you some money, Pastor Bill, I could write you a check and that would come out of my banking account, and that would be an immediate transfer of funds. Then there's cash equivalents. Now, those are also a liquid asset, but you do have to convert them back to cash. So those would be like your money market accounts. And sometimes on money market accounts, you have a one-day period before you can convert it into cash. Like if you've got a money market account at your bank, it may be a little more liquid than a money market account, say, with a stockbroker, because you're in some kind of a daily investment like short-term treasuries or short-term bank notes, and they have to sell that to give you cash, so you usually have to wait a day. So just remember that. And UST bills are very liquid in terms of cash equivalents. And then next on the pyramid would be publicly traded stocks. And these are stocks that are traded on either the New York Stock Exchange or the NASDAQ. So New York Stock Exchange is kind of the one where the bigger companies are traded. NASDAQ has typically been tech stocks and small stocks. You can get into stocks that are not publicly traded. Those would be very illiquid because there's no market that's trading those stocks every day. I've owned some stocks on pink sheets. There was a bank in Columbia, South Carolina that started out, and I opened an account there and invested a few $100s because as a shareholder, you got certain benefits. And I was like, well, it's worth it for a few $100s. But that bank was traded on pink sheets, which meant that there was a big spread between the ask and the bid price. So it may be that I was trying to get $8 a share if I was trying to liquidate that, but nobody was able to buy it at $8 because there was no market. So again, you got to be careful about what you're doing with individual stocks. If somebody calls you up and says, "I've got a great penny stock idea, Pastor Bill, I want to sell you 1,000 shares at 10 cents a share," sounds like a great deal, doesn't it?
Yeah, it does sound like a good deal.
Until you try to go to resell it.
Yeah.
And then there's no one that can buy that, not even at 10 cents.
So do you, throw this question out, do you set the price of a stock that you want to sell, or is it just what it's going for that day?
So there's a couple ways you can do that. That's a good question. There's called a market order. And most stocks that are traded, they have a pretty tight ask and bid, but some of them have a pretty wide ask and bid. And so there's always an ask price, which that's set by the last trade. So a stock could be an ask price of $100 a share, and then the bid is $85 or $90, or it could be $99 a share, just depending on the liquidity of the stock. And if you put in a market bid, you may not get the ask price, but you'll probably get pretty close to it, the way the brokers work. But you can do a limit price, and you can put in a limit price that says, "I want to sell this at $101 a share." And it may be trading at 100 that day, but it may hit 101 during the day's trade, and your stock order would execute then. But if it doesn't hit 101, then your stock order doesn't execute and it goes away unless you have a good to cancel order, and that would stay out there until you cancel it. So there's a number of ways to place stock bids.
Wow.
And then next on the liquidity, and that's a good question, by the way. Next on the liquidity scale would be individual bonds. And individual bonds are very liquid, but they also require some very unique selling. Usually you have to go through a bond trader, and usually the spread, which is that bid ask, the difference between the bid and ask, is usually pretty wide. So if you buy a bond for $10,000 and you go to sell it, you may have to sell it for $9,900. I mean, it's just not as liquid and not as easily to get rid of as a stock where you may buy of the underlying company issuing the bond is good. That's a good deal. And, bonds fluctuate based on the Fed interest rates. So it can go up or down. But the thing is, an individual bond, when it matures, will give you your money back, plus all the income that you accumulated. So it can be a good way to invest in income. And then next on the list is precious metals. And I just saw a blog on an investor blog that I participate in. There were some guys that were in precious metals, and they were talking about, how do I liquidate? What are you guys seeing? And although they're liquid in a sense that you can convert them to cash, not as easily as stocks or bonds, but you do need a metals broker. And what they're saying now is that because the fluctuation of gold and silver prices have been very volatile, whereas before it was going up, that these individual metal brokers are not necessarily buying back physical silver and gold, at least not at the price that you would expect. They're heavily discounting it. So again, you can go into gold and you may pay $4,000 an ounce, but when you go to sell it, you may only get $3,800 an ounce. It just depends on what the market's doing. So you have to recognize that if you get into precious metals. And then real estate can be a great investment. It can generate income through rental income. But, when you go to sell real estate, what happens, Pastor Bill?
You have to find someone to buy it.
Yeah, you gotta list it probably with a real estate agent, so you're gonna pay a pretty good commission, and then you gotta find somebody to buy it, and hopefully somebody will show up in a short period of time. But if it becomes a buyer's market or a tough market to sell, your property could sit on the market for 3 or 4 months. So you got to recognize if you go into these assets that are illiquid or have some questionability about liquidity, you just have to know what your exit strategy looks like and be willing to live with that. And then a lot of people used to collect and still do sports cards and rare coins and automobiles and all kinds of collectibles. And what do you think about that in terms of trying to sell those?
Well, as you said that, my mind went to the Cabbage Patch. No,
Yeah.
not the Cabbage, but the little Beanie Babies.
Beanie Babies, yeah.
People started buying those up like crazy, and then all of a sudden the bottom fell out. They're not worth anything.
Yeah.
So it's a very, I would say it's a very limited market.
Yeah, that's exactly right. It's a limited market. The people that like baseball cards are not the entire population. It's a very small segment of the population. So unless you have a very rare card that you could auction off, say you have a card that's worth $20, it's only worth $20 to another collector willing to pay $20. And so, like you said, the bottom could fall out of that and people could say, I just don't want that. It's like we knew an antique dealer in Chattanooga when we lived there, and she was telling us, nobody was buying antiques anymore. And you think about it, the younger people really don't care about antique furniture, is what our observation has been.
Or I had a pastor that he collected basketball cards, I think. And so if some friends of ours had a baby, and so for a gift, he thought he'd get them started out in the cards, and he gave the baby a card. And of course, new parents, they took the card and they gave it to the baby, and the baby immediately started in. All the value of the card just went out the window.
Yeah, and that's the other thing with collectibles. You typically are not going to be able to use them. You're trying to put them up, right, and protect them. You don't want to expose them to baby drool or anything like that. That's a good point. And then the last item in asset class that doesn't have a lot of liquidity would be any kind of private equity or venture capital or hedge funds investments. And that's usually because there's market restrictions on those instruments and funds, and you're not able to liquidate unless they approve a liquidation. So, Pastor Bill, do you have any comments or questions about liquidity?
No, I think you did a good job covering what liquidity is. So I think I'm good.
Yeah. So let's talk about suitability. Suitability is a standard promulgated by FINRA. So FINRA is the Financial Industry Regulatory Authority, and it's a private, non-governmental, self-regulatory organization that oversees U.S. broker-dealer firms and their registered representatives. In fact, when I used to be a registered rep back in Chattanooga, you could look me up on the FINRA website, and it would show everything that was relevant about me. And basically what you want to do on a broker-dealer, if you do look them up on FINRA, you want to see if they've had any violations of the rules or if they've ever embezzled money. That would show up too. So I don't know. I guess if Bernie Madoff went back into trading securities, if he was allowed to do that, you'd look him up and it would say, yeah, he embezzled a lot of money. So you want to at least do a search on the FINRA site if you got a question about your broker. And then also on suitability, that's something that the FINRA website would cover as a rule. And so there's a rule mandating brokers and brokerage firms and their reps to have a reasonable basis to believe that a recommendation is appropriate for a client. So the recommended investment must align with a client's specific financial situation. So here's the thing. It's risk tolerance and investment objectives are the main two. But there's also factors including age, income, tax status, and time horizon, as well as liquidity needs. And this is known as the rule of know your client. So, for example, just to give you an example of this, if a client came to me and I knew they had 3 or 4 children that are at high school age and they're about to go to college, and they're looking to invest a sum of money, then the thing I would ask them is, how much do you need to reserve for college? Because then your time horizon is less. So you want to put that particular client into an investment that's a little more liquid, a little more conservative, so that when their children go to college, you can get that money out easily, and the money hadn't fluctuated or lost value very much. So you might put them in some short-term bond funds or something like that if they have an immediate need for cash in the next 6 to 12 months, let's say. And then you would, if they have a longer time horizon, you might put them in some conservative growth stocks. But that would be the reason you would make those decisions, as you're looking at their suitability requirements. Now, here's an interesting thing, Pastor Bill. A lot of young people are going to SoFi as a bank, which they can invest directly through SoFi, or they're doing Robinhood where they can invest online, and there's no broker that's going to advise them, but they probably have to fill out a questionnaire as to their suitability and what their investment objective is. And there could be some monitoring of that. But for the most part, if the client is doing all the investment decisions, they can override that suitability. So they could get into situations like individual stocks that are very risky, and things that are not suitable for them at their given their circumstances. Even though they have a long time horizon, they may be taking unnecessary risks, if that makes sense.
Well, sometimes, too, my understanding is through the bank that there's sometimes you need to talk to an investor just because you'll kind of be penalized by the way that you take money out or you do something.
Yes.
And when's a good age, generally speaking, if you got someone's going to be going to college? Should they do it in a year before, 3 years before?
Well, if you have children and you look at what the financial planning software says, it'll kind of scare you to death. It'll say like, you need, I don't know what it is now, but it used to be like around $200 and some thousand a child to raise them, get them into college, and so forth. And so you put those goals out there, and those are big goals if you've got multiple children. But I've always found out that, there's always a way, and God provides a way usually. And if you pray about it and you're faithful, God will provide a way. So you need to be wise about saving early, but at the same time, don't get discouraged just because someone says, well, it's going to take $250,000 to put your child through college. Well, that may be true in certain colleges, and you don't know if your child's going to qualify for scholarships. And there are certain in-state schools that would be less than that. So don't freak out what the software says. You may be able to do something different from that. I know I used to do the software for clients, and it was always overestimating, and it would throw
Mm-hmm.
out this number, and it's like, oh my gosh, how am I ever going to hit that? And I would like, well, calm down.
Mm-hmm.
There'll be a way. We'll figure out a way.
Mm-hmm.
But the earlier you save is certainly the better.
And one more question. Got a lot of questions today. Um, do financial advisors do they look at scholarships and stuff like that for kids, or is that something that strictly comes from school?
Well, I think scholarships are so individualized that financial advisors would not consider
Not
that in
considered.
the plan. And yet, in most states now, there's a lot of states that have these Hope scholarships,
Mm-hmm.
where if you get a certain grade point average in high school, you can qualify as long as you go in state.
Mm-hmm.
But I would say, given where the best money is and the best bang for your buck would probably be to look at something at technical college first
Mm-hmm.
in terms of trades, and then you could build off of that. So maybe you start out in a trade and
Mm-hmm.
then eventually go back to college, and sometimes your employer will pay for that college education or help contribute to it. A lot of employers have plans set up where they'll contribute a certain amount. Of course, after you're working, it's a little harder
Mm-hmm.
to go to college, but it's not impossible.
But now you mentioned that, and I don't want to get off subject, but um, I have a daughter-in-law that she went ahead on her own and got a master's degree. Well, then when she went to get a teaching job, they didn't want to pay for a master's degree. They wanted a bachelor's degree. Um, so she actually had a higher degree than what she needed that she paid for.
Right.
Had she gone as a bachelor degree, they had things that they would help her pay to get the master's degree, is what I understand.
Mm-hmm.
Um, so all this that you're talking about, all of it needs to be really worked out.
Yes. Right.
Yeah, I wish I had known that years ago.
Yeah, absolutely. Yeah, we all look back and say, well, we could have done this, and I think we all have made mistakes for sure. I have my share of mistakes. That's how you learn sometimes.
Yeah, for sure.
And then, in determining risk tolerance, which is really a big part of your investment plan, you might get asked some questions either online or by your investment advisor. So some of the questions might be like, how comfortable are you if your investments lost 10% of their value? And you may say, well, that's okay. And then the next question might say, well, how comfortable are you if your investments lost 25% of their value? You're like, well, I'm still probably okay because I got a long-term horizon. And then it might say, well, how comfortable are you if your investments lost 50% of the value? And then you might say, whoa, I'm not comfortable at all with that. So as you answer these questions, they're scored or weighted, and then the weighted average will probably come out to a certain number, and that number will tell you based on your answers what kind of risk tolerance you have. So you could either be very conservative, you could be conservative with growth, you could be aggressive with growth, you could be speculative. And if you're speculative, you'd probably be willing to lose 50% of your investment because you're placing bets on highly speculative stocks. So I don't know if you're willing to lose 50% of your value, are you, Pastor Bill? I'm not.
No, I've done a little bit with like 401k, and you could go on this site and you could pick where you wanted your stuff to go to. And I would always pick like two aggressive ones, two non-aggressive ones, and two medium aggressive ones, because my thought process then was always that that my thought process was always I might lose some on the really aggressive ones, but the ones that aren't very aggressive, I probably won't lose much on.
Right.
Is that a good formula, or was I really messing things
Yeah,
up?
no, that's actually pretty good. I was going to bring that up too. If you've got a certain amount of money and you've got some flexibility, what I would tell clients is maybe you want to look at buckets. So you want to have a bucket of very conservative investments, and that's going to be kind of your base dollars that you don't want to lose. You won't, they could go down as every stock or mutual fund. When a market goes down, 90% of everything else will go down. Only 10% of the stocks will be stable or go up in a down market. So, there are going to be times when you see that. But, you could have a bucket of conservative stocks, a bucket of kind of very aggressive conservative stocks. And then if you wanted to be speculating, you could speculate on the latest bioscience stock that maybe is looking for a cure for cancer. Or in today's terms, is probably speculating on some tech company that could have something really groundbreaking today. We don't know if it'll be, groundbreaking tomorrow. Just to give you an example, Facebook or Meta reported earnings, and although they beat earnings, their capital expenditures for AI data centers was so big that they got slammed on the stock price. That happened to SpaceX too. They blew away earnings, but their capital expenditures was so much. So what does that mean? It means they were spending more cash than they're taking in, and the investment world kind of got a little bit spooked by that. So again, that would be kind of a speculation of a stock. SpaceX is a good one that would be a speculative investment. Long term, it might be great, And, I could tell you a couple stories about suitability. I don't know if you want to hear a few of those.
I would love to hear it.
Yeah, so sometimes, and these are from when I was doing managing investments, and sometimes you end up with the stock market just crashing. And I had a bunch of clients during the 2008 financial crisis where their investment portfolio went down over 30% in a matter of months. And, what I was mainly there to do was to calm them down and say, hey, look, the market corrects, and you can end up with if you pull out now, you could sell at the absolute low, and it's hard to understand when to get back in. So I had all my clients except for one went with my advice, and all of them by a year later were either even or up 10% in their portfolios after the financial crisis. But one individual, I remember, he was just really upset. I couldn't calm him down. He wanted to pull all his money out and put it in cash. And, ultimately as an investment advisor, even though that wasn't suitable for him to do, the investment advisor cannot override the choices of the individual investor. So if they want to do something that really doesn't make sense, you can't really tell them not to. I mean, you have to honor their wishes. But what you do is you document what you talk to them about, so that you've got in writing, what they said they wanted to do, so they can't come back and say, hey, I took all my money out at the absolute low, and a year later I should have been in the market. And they can't come back and sue you for that. So you're always documenting as an investment advisor. And then there was a gentleman that was in his 80s, and he wasn't really an investment client at the time. He was more of a tax client. He came in, and he was telling me this story about he had this variable annuity, and his insurance salesman had put him in a new annuity, but he had to pay a deferred sales charge. So what that means is, in an annuity, there's always a big commission. So people love to sell annuities. But if the client liquidates that annuity before the sales commission is earned, they owe a large commission. Otherwise, it's kind of built into the product. So I said to him, I said, well, what company was that? And so he told me, I'm not going to mention the company, but I looked at the contract and I looked at what the suitability requirements were. And I noticed on the suitability requirements attached to the contract, there were a lot of answers that didn't fit his personal situation. So this is sometimes called churning, when investment insurance salespeople and annuities or investment advisors churn policies to earn more commissions. Mm-hmm. So I said, here's a couple things. You're 85, so there's probably elder abuse involved here. I said, you could probably sue this company for whatever you want at this point, in certain limits. Mm-hmm. And I said, what do you want? And he said, well, I want my money back 100% without the deferred sales charge. And I would love to have interest paid at least equal to the money market rate, which I think was about 4.5%. Mm-hmm. For the time that they held. Well, let's call them on the 800 line. So we called them on the 800 line, and I said, I'm sitting here with Mr. So-and-so. Do you realize he just got a new policy? He had to pay a deferred sales charge, and he's 85 years old. And Pastor Bill, there was complete silence on the other end of the line. And I looked at him and said, don't say anything, don't say anything, don't say anything. And there was literally like a 30-second pause. Mm-hmm. And then the lady said, let me check with my manager and get right back to you. And she put us on hold, and I said, now don't say anything, let them talk, and then I'll talk. And so they came back, and she said, what can we do for you, Mr. So-and-so? And he goes, well, I'm here with my advisor, and he would like to tell you a few things. So I said, well, here's what he wants. He wants 100% of his money back, plus all the interest that should be paid on that. 4% is what we want. Compound it. Mm-hmm. And you know what she said?
Yes, sir.
She said, yeah, exactly. She said, we'll make sure that happens. When we'll be mailing you a check on this date. And so they knew they were wrong. Mm-hmm. And that's the thing, is that sometimes you can get sucked into an investment and you really aren't doing it because it's good for you. You're doing it's good for the advisor because they may be earning a large commission on that. And they know better because I was licensed to sell annuities, and you have to take continuing education and ethics, and so the person that sold him that should have known better. And I would say most advisors, probably 99% of them know better and wouldn't abuse somebody like that, but you never know.
Do you think something happened to that advisor himself, or do you think?
Well, I don't know, but I would imagine the company that he was representing, because you have to be appointed by those companies, probably mm-hmm. dropped him and said, you're not selling for us anymore.
I would think so.
Yeah,
I would think so.
Yeah, because that could have been a big liability for them. And actually, the guy he was a Christian guy. He didn't really want to sue them mm-hmm. over a big, but he wanted something, that was reasonable. And I think that was a reasonable ask. I said, I didn't ask him. I said, you could probably ask for more. And he said, no, I'm good with this. And I said, okay, we'll do that. So, Sometimes we as investors also think we can protect ourselves from losses. And I would ask you this, like in the 2008 crash that happened, Pastor Bill,
Mm-hmm.
do you think gold went up or down?
Um, I'm going to guess that it probably, well, they say gold's always a safe thing, but I think sometimes it does go down. So,
Yeah, actually, it lost 30% of its value.
wow, I wouldn't have thought it went down that much, but
Yeah, and the reason it did is gold, every market and every asset is demand and supply. And so, if there's demand, the price is going to be stable or go up.
mhm,
But what happened in the financial crisis is stocks went down. There were margin calls, and people had to start liquidating assets to cover their margin. And so a lot of investors or a lot of hedge funds had put money in gold and they had to liquidate it all at once. So, and it's just like today, gold hit a peak and silver hit a peak in January of this year. But as soon as the Iran war was announced, gold and silver tanked. Now, you would think gold and silver would go up during uncertain times, right?
right, yeah,
But they've lost, like silver's lost over 50% of its value. I think gold's lost somewhere around 40 or 40% maybe, um, or at least 20 or 30%. But it's all dependent right now on what Trump says.
yeah,
And whether we're at war or we're not at war, or whether we're bombing or not bombing, and price of oil going up or down. So one thing to note is asset classes don't always go up and down the
mhm,
way you think they might. And then even in the 1930s, um, a lot of people don't know this, but the government itself outlawed the ownership of gold. So I don't know that that would happen, but if we were to think about where the markets might go in the future in terms of what Revelations talk about, in terms
mhm,
of you can't buy or sell without a mark. If the government today said, "Well, we're going to make everybody use crypto
mhm,
to buy and sell," well, that means that all your money in the bank would have to be converted to crypto. Anytime you sold anything that was an asset would have to be converted to crypto. And they may outlaw certain types of money, which could be physical money like dollar bills and
mhm,
coins, but they could also outlaw precious metals because you could get around buying and selling, um, if you had precious metals, because you could maybe buy in the black market, but with all these flock cameras and stuff, they probably know that you
yeah,
did it.
yeah, exactly.
So, you just have to know that ultimately it's God that's going to be your security. I want to get to a new investor and talk about what they should be doing. So if you're new and you're just starting out working and your budget's pretty solid, what do you start doing? Well, the first thing I would look at is, does your employer match your 401k plan? Because there's such a thing as a 401k where you can put money in it. It's usually managed by a large company that's a financial advisor as well as a fiduciary, and they'll offer you certain funds to invest in. But let's say, Pastor Bill, that
Mhm.
my company will match the first 3% of my contributions. Is that a good deal?
Uh, Well, 3% is free. I would think so.
Yeah, it's free money. It's basically you're doubling your money, so you're getting 100% return on that money. Now, there may be some vesting required, so you may have to work at the company anywhere from 3 to 5 years, or maybe a little bit longer to 100% vest.
Mhm,
But that is free money, and that can be a huge ability to generate returns. And I talked about this at one of our Wednesday night classes. Is there's a rule of 72. So the average return on the stock market is either 6 to 9% on average. So if you're doing 3% and you're getting matched 3%, that's basically 6% of money that you're putting in there. You're getting a 3% return automatically. Let's say you get a 6% return on that money. So now you're up to 9%, and 9 into 72 is 8. So you'll double your money in 8 years. So that's a pretty good deal. Mm-hmm. And if you keep contributing every year, then that compounding continues. And that's how, if you continue to invest in a 401k plan, you may end up having a nice nest egg when you retire. So one of the things that you want to look at when you're looking at funds in the 401k plan is you want to look at, first of all, is it suitable for you? So again, there'll be a risk profile that you probably have to fill out, and then, or is it suitable? So is this a fund that's more like a money market fund that has very, very low risk? Or is it an aggressive fund like a fund that invests in international stocks that would be very aggressive? Are you comfortable with that? And then you want to look at the what's called the prospectus of the fund. And in there you'll find the 3, 5, 10-year returns. And you want to look at that. That's not necessarily a predictor of future returns, but you can see if in 10 years the fund's only gone up 1%. Is that kind of the fund you want to invest in, Pastor Bill, versus a fund that maybe went up 12% every year over 10 years?
Well, the higher the percentage, the higher the money, right?
Right. Yeah. And so you want to understand the objective of the fund. And then here's a key thing that a lot of people miss. You want to look at the top 10 holdings of the fund. And the reason I say this is you get a lot of mission drift in these funds' objectives when everybody is in tech and making 20, 50% year returns on tech. Some of these conservative funds will start drifting into tech, and you may think you're diversified by going into 4 or 5 funds, but if you look at the top 10 holdings, maybe the 5 top 10 holdings of all the funds are like NVIDIA, Intel, Broadcom, Palantir, all these different stocks that are very risky, but they also have a lot of return. And so if the tech market crashes, all of a sudden all your funds are down, and they shouldn't be like that. So I always look at the top 10 holdings when I'm looking at funds and saying, is there mission drift compared to their objective? So you want to look at that as well. And then finally, there's an advisor that will advise you usually, that you can call an 800 number and say, here's my situation, what do you recommend? And they'll usually help you out on that. So that's their role, is to help advise you and guide you in your investment decisions. So if you're older, you might want to put money in one of these funds called, I think it's like an age-related fund. It's a retirement fund. It says, basically a huge basket of stocks and bonds. And if your retirement age is 65 and you're 55, well, you're putting it into this retirement fund that has a basket of stocks, and it's very conservative. It's got bonds. Or if you're young, you probably want to go with the aggressive growth funds and put most of your money there. But again, you want to make sure it's suitable for you in terms of risk tolerance. Do you have any questions or comments?
Yeah, I got a question that deals with this, but of course, working, I had a 401k and all that kind of stuff. But there was another guy that when I talked to him about investing and stuff, he says, I don't invest. I buy U.S. bonds. Do they even do U.S. bonds and stuff anymore?
Well, they do, and again, you can buy them individually or from the government directly, or you can buy them through a broker, or you can do an investment fund. If I were in government bonds, I'd probably look at some kind of fund and let somebody else manage that for me. But you can do them individually, and they have these I bonds now, which are inflation adjusted bonds, and those actually have done fairly well because inflation was pretty high over the last few years. But again, what you end up having on a lot of these bonds is something on the taxes called original issue discounts, and even though you're not collecting money, your bond is increasing in value, and you're actually taxed on that increase.
Yeah.
So you have to know what the tax rules are as well.
Yeah. And they have a long. I know that some of them I used to see were like 30 years. Yeah, I mean you could cash them out earlier, but
Right.
for it to get the full, it was almost like double a lot of times.
Yeah.
To get the full thing, you had to wait like 25, 30 years.
That's right.
Yeah, so is that a good investment? It doesn't seem like it'd be a very good investment.
Yeah, I think it's probably not really the thing to do anymore. I think there's enough alternatives out there that are broad enough in terms of risk that you can find something that meets almost everybody's needs, either through a closed-end fund, a ETF, or exchange traded fund, or direct investment through a broker. So yeah, I think you're right on that. Well, let's talk about 7 habits of rich people. And this was an online article by Mary Hunt, featured in the Epoch Times. And some of these are going to sound familiar, like they're biblical in some ways, Pastor Bill. So the first one, I think we talked about this with Ben Franklin, is early to rise. People that are wealthy usually get up early. They're doing reading or planning or using hours early in the morning to work out and be physically fit. And then whether they take a lunch or not, most of them do eat, but a lot of them work at their desk while they're eating. I have to admit that was my habit. I very, very rarely went out with the gang for a long lunch. I usually sat at my desk and caught up on emails or did some planning for the rest of the day. And then there's no slacking. So at the water cooler, I was never one to walk down to the water cooler and talk about everything that was being talked about for the day that didn't have anything to do with work for 10 or 15 minutes. But, that's something that rich people don't do. They don't hang out at the water cooler. And then being calorie conscious. So they understand that being physically fit helps them to be able to wake up early and have energy all day long. So they're very calorie conscious. And, have you ever eaten like a spaghetti lunch or some pizza lunch? I mean, you load up on carbs. And
Do you really want to go there, brother?
Yeah. And then, yeah, exactly. I've been there. But I load up on carbs, and then like at 2 or 3 o'clock, you're like, oh, my gosh, I'm starting to get sleepy here. So they're definitely not doing that. And here's an interesting one. They don't spend a lot of time gossiping. And I think, I've never done that at work, where I've sat around and talked about people, but it always bugged me when other people would. But, the gossiping is viewed as a waste of time, and I would agree that it's not profitable. And that's biblical, too. So a lot of these are really biblical. It's interesting. Limited internet. The rich or wealthy don't spend a lot of time surfing the web for hours or spending hours on, social media. And then the 7th habit is earn more, spend less. And, that was what really helped me when I was went through that disability event, Pastor Bill,
Mhm.
even though I had a huge salary increase as I went up in the corporate ladder, we didn't buy a bigger house, and we used the money to pay off debts and pay off cars, so that we were very flexible. So it's getting towards the end, so I want to make sure we've got time. Pastor Bill's got a very great talent of writing songs, and there's a song I asked him to play. And Pastor Bill, tell me about what you're doing on that. You're actually got some songs out on
I've used
Spotify, is that right? And Apple.
iTunes, Spotify, Amazon. Yeah, I have like a thing that will just put it out on all of them.
Mm-hmm.
And I
And
use AI, but I use it's all my words. So it's like, as you can tell, my voice gets going out. So it's like the Lord's given me a second voice, being able to use this AI with my writing. And so that's how these have come about. And so now I'm putting CDs together and making them available out there.
That's great. And how do they look you up, like on iTunes, for example?
Usually what I tell people is you can look me up by Bill Ray, which is Billray, and then Kisses. That's the third CD, but usually if you can get Kisses, it'll lead you to everything else.
Yeah, so it's not Bill, it's just one
Yeah,
L.
just Billray.
Yeah, I think that's the mistake I made, as I was using two L's. So good to look up. Well, let me pray and sign off, and then we'll go to a song I asked you to play. So, Lord, I just ask that everyone that's listening to this would be blessed somehow. And if they're really looking for increase or income off investments, I ask that you would bless them with increase and bless them with income. That you would make it not an idol to them, but a tool to be used for their family, for their church, and for themselves as well, to live day by day. God doesn't want any one of his children to have to beg, and I really pray that anyone listening to this won't be in that situation, that God will provide. He's a great provider, and I ask that he'll bless each and every one of you. So until next time, manage your time and your resources wisely, because we do not know the day or hour in which our Lord Jesus Christ will return. So with that, I'll say goodbye and have an excellent day. And Pastor Bill, take us out with your song, please.
Blessings will fall like raindrops when God's people worship Him. When you worship Him, blessings will fall like raindrops when God's people, they worship Him. So raise your hands up high, let the floodgates open wide. Thanks for watching. Won't you tell somebody to join you next week for the Daily Stewart Show, Wednesdays at 10 a.m. right here on Double